To match the sheer financial weight of the IPO we are looking at today, you would basically have to combine the market caps of Boeing, Lockheed Martin, and AT&T.
Right, which is just staggering.
It is. And even then, you would still be tens of billions of dollars short. I mean, we are talking about a single company that controls the internet infrastructure of the future, holds these massive global defense contracts, and effectively operates as an independent space agency.
Yeah, it's wild. For decades, retail investors have just been completely locked out of this specific, wildly futuristic combination.
Exactly. You had to be a billionaire or run some sovereign wealth fund to even get a seat at that table. But, well, that is about to change.
It completely redefines the scale of public market access. We are looking at a liquidity event so massive it will, frankly, create its own gravitational pull on the broader indices.
Oh, absolutely.
When the private market's most guarded crown jewel finally opens its doors, it forces every capital allocator on the planet to, adjust their portfolios.
Well, welcome to this deep dive. Our mission today is to analyze what could easily be the biggest, most monumental public listing in recent market history, which is, of course, SpaceX's upcoming IPO.
Is the big one.
It really is. And we are pulling from their recent SEC filings, extensive financial reporting from Reuters and Yahoo Finance, and insights from today's sponsor, Verpoint. They're a leading online CFD brokerage that allows traders to take advantage of these exact kinds of massive market moves.
Because the raw numbers being floated right now, they require us to kind of strip away the cultural hype and look strictly at the mechanics of the market.
Right, because the hype is deafening.
It is, but the scale of this offering breaks most traditional valuation models, so we have to stay grounded in the data.
And to you listening, whether you are a highly active trader looking to capitalize on tech volatility, or you're just insanely curious about how a trillion-dollar space behemoth operates in the public sphere, this deep dive will separate the science fiction from the cold, hard financial mechanics.
Which is exactly what we need right now.
Okay, let's unpack this. Because the cultural excitement of, like, a Mars mission is one thing, but the S-1 filing from May 20, 2026 tells a much more grounded, revenue-focused story.
Yeah, the S-1 filing officially starts the clock on listing Class A common stock. But the number that has everyone paying attention isn't really the share class.
No, not at all.
Reuters reports that SpaceX is looking to raise more than $25 billion in this offering.
$25 billion. I mean, just for context, a highly successful blockbuster tech IPO might pull in, what, $2 or $3 billion from the market?
Exactly.
Raising $25 billion isn't just going public. That is vacuuming up a significant percentage of available global venture capital in a single fell swoop.
It is an unprecedented capital drain, and they're targeting a valuation above $1 trillion.
$1 trillion, wow.
And to justify that, you have to look way beyond the launch vehicles. The market isn't pricing a rocket company. It is pricing a convergence of 4 massive macroeconomic themes.
Okay, break those down for us.
So first you have the baseline space infrastructure, which is the reusable launch contracts. Then you have global connectivity through Starlink. Third is the defense technology side. And fourth, which is the massive multiplier right now, is AI-related data infrastructure.
Think of SpaceX's launch infrastructure less like a futuristic space endeavor and more like laying down the physical fiber optic cables in the 1990s.
That's a great way to look at it.
Until those cables were in the ground, the early internet couldn't scale. And until SpaceX drops the cost of orbital payload to, like, $10 a kilogram, the low Earth orbit economy can't scale. They essentially own the toll booth to space.
They absolutely do.
You need their rockets to get the hardware up there, you need their Starshield defense tech to secure it, and you need the Starlink satellite mesh network to act as the low-latency backbone for AI data centers.
Let's dig into that AI data routing component, actually, because that is the hidden engine of this valuation. We are seeing a massive bottleneck on Earth right now with AI data centers.
Because of the power grids, right?
Exactly. They require immense amounts of power. Companies are trying to build these centers near remote geothermal or hydroelectric sources, far away from traditional fiber grids.
Oh, I see where this is going.
Yeah. Starlink's optical laser links in space allow those remote data centers to backhaul massive amounts of AI training data with lower latency than undersea cables. So SpaceX isn't just launching satellites, they are routing the global AI economy.
I hear all of that, and look, the narrative is undeniable. But I have to push back on the math here just a bit. A $1 trillion valuation, isn't that essentially pricing in absolute perfection?
How do you
I
mean?
mean, at $1 trillion, the market is assuming nothing ever goes wrong. It assumes rockets never explode, regulatory agencies never step in, and Starlink captures the entire global telecom market without a single hitch.
I get why you would think $1 trillion price isn't perfection, but you are looking at it through the lens of traditional software as a service multiples.
Fair enough.
You have to look at the total addressable market, or TAM. If Starlink effectively replaces standard global telecom infrastructure, which is a multi-trillion-dollar global market, a $1 trillion valuation is actually a conservative floor.
Wait, really? A floor?
Yes,
Fair.
because you're replacing AT&T, Vodafone, and China Mobile simultaneously.
Okay, but the tension between that massive potential and that astronomical price tag is going to create absolute chaos in the order books.
Oh, without a doubt.
Because that $1 trillion valuation is so heavy, any missed earnings or like launch delays will cause massive intraday swings. Catching those swings on a delay is how retail traders get crushed.
Exactly, which is why your execution platform matters so much.
Right. And this is exactly where our sponsor, Verpoint, comes into play. As an execution-only trading platform, Verpoint empowers traders to take advantage of these exact types of massive, fast-moving market moments by trading CFDs on ETFs, stocks, indices, and more, all from a single account.
Yeah, when the market moves violently, you need real-time execution.
And what's fascinating here is how the market mechanically processes these rare mega-cap listings. To really understand what might happen to SpaceX on day one, we can't just look at typical tech IPOs.
No, the scale is just too different. We have to look at the precedent set by the Cerebras IPO earlier in May 2026.
The Cerebras numbers are a perfect case study. They priced at $185 a share, opened at $350, and closed the first day at $311.07.
Incredible moves.
That is a 68% intraday gain after raising over $5.5 billion. But let's get into the why. How does an asset jump 68% in a single session when we're talking about billions of dollars exchanging hands?
It comes down to the mechanics of the scarcity premium. It is a math problem in the institutional order book, not just retail hype.
Right, it's structural.
Exactly. When large institutional funds and passive index trackers have strict mandates to allocate, say, 5% of their portfolio to next-generation AI infrastructure, they have to buy.
No matter the price.
Right. But if there are only one or two viable, pure-play public companies in that sector, the order book mechanically stacks up with massive institutional buyers and almost no willing sellers.
So they are effectively tripping over each other, bidding up the price, just to fill their mandatory allocations.
Exactly that. The demand is artificially compressed, and SpaceX is poised to benefit from this exact same scarcity premium.
Because there's no alternative.
Right. If an institution wants exposure to a fully scaled space and satellite platform, there are virtually no direct public market substitutes. You cannot simply buy a competitor because a pure-play competitor at SpaceX's scale just does not exist in the public sphere.
So the floodgates open, and billions of dollars of pent-up mandatory institutional demand rush into the one available stock.
Precisely.
But catching a 68% swing requires a trader to be incredibly tactical. You cannot be lagging by 10 seconds when the institutional algorithms are moving that fast.
Speed is absolutely everything in those moments.
Which is why active traders rely on Verpoint's cutting-edge tools. Their mobile app is designed specifically for speed and efficiency, allowing traders to seamlessly react to live market data and real-time insights on the go. You have to be able to act the moment the data hits the tape.
So speed is your execution mechanism, yes, but your strategy has to account for the structural differences between Cerebras and SpaceX.
Because they aren't perfectly identical situations.
Exactly. Cerebra is squeezed because of a tiny float. The actual number of shares available to trade was incredibly small compared to the demand.
Right. If their float is incredibly tight, but they are raising massive amounts of capital, the day one math just gets chaotic.
Right.
I mean, how does an institution even begin to fill a multi-billion-dollar order without violently spiking the price against themselves?
They often can't, which is why you see those explosive opening prints. But this raises an important question about SpaceX. We have to look at the mathematical reality of a $1 trillion valuation cap.
Which changes everything.
It does. Cerebras had a highly concentrated narrative and a small float. SpaceX is bringing a massive float to market at a valuation that already makes it one of the largest companies on Earth.
Let me try an analogy here. It's like a movie that has been hyped for 5 years. The trailers are incredible, the director's legendary, the budget is totally unprecedented.
Okay, I follow you.
But by the time opening night actually arrives, the math of box office returns requires it to break every existing global record just to break even. It essentially has to win 10 Academy Awards right there in the theater just to meet the baseline expectations of the audience.
Yes.
If it's just really good, the financial backers actually take a loss.
That captures the dynamic perfectly. A positive first-day move for SpaceX is entirely reasonable if retail demand pushes alongside the institutional mandates.
With a massive top.
Right, a Cerebras-style 60% surge.
Yeah.
That would require generating $600 billion of new market capitalization in a single trading session. To put that in perspective, that means creating the entire value of a company like Visa or JP Morgan out of thin air in 6 hours. Gravity applies to markets just like it does to rockets. The larger the mass, the harder it is to accelerate.
And if it doesn't accelerate, if the market decides that $1 trillion was too rich and the stock corrects off the open, that is where the mechanics of CFD trading change the game.
Because you aren't just stuck going long.
Exactly. Whether a stock surges 60% or violently corrects downward, a platform like Verpoint is built for traders who want to capitalize on any direction the market moves. Yeah. Because you are trading contracts for difference, you can take positions in falling markets just as easily as rising ones.
It gives you flexibility.
Right. And Verpoint merges advanced artificial intelligence with seasoned human expertise backed by over 20 years of market experience from leaders like Reek. They deliver data-led insights that help traders navigate complex, high-stakes environments without paying hidden fees.
Because when you have $25 billion of capital entering the market in a single event, the ripple effects are going to create volatility across the entire tech sector. Your strategy needs to account for the broader macroeconomic environment we are navigating here in mid-2026.
Let's synthesize that climate for a second. The appetite for AI infrastructure and space dominance is just voracious right now.
It's all anyone is talking about.
Right. Sovereign governments are treating space as the ultimate high ground, and tech giants are treating AI data routing as literally a survival necessity. It feels like every capital allocator is trying to pivot into these two sectors simultaneously.
But because of that unified pivot, the stakes are higher than ever. The market is incredibly hungry for innovation, but we are seeing a tug-of-war between the desire to own the future and the strict mathematical limits on how much liquidity actually exists in the system.
Which brings up the Fed.
Exactly. The Federal Reserve's rate policies, the cost of capital, all of these macro factors dictate how much cash can actually flow into a high-risk, high-reward asset on day one.
Here's where it gets really interesting, though. We talk about chasing these intraday pops and capitalizing on scarcity premiums, but using leverage tools like CFDs to trade these massive events is a double-edged sword.
Oh, absolutely. The risk profile is extreme.
I want to be entirely transparent with you listening. CFDs are complex financial instruments. They carry a high risk of losing money rapidly because leverage multiplies your exposure.
It works in both directions.
Yes. If a stock corrects 5%, leverage can wipe out a significant portion of your account. A high percentage of retail investor accounts lose money when trading these instruments because they misunderstand the mechanics of leverage during volatile events. You have to bring strict risk management to the table.
If we connect this to the bigger picture of institutional trading, that is exactly why choosing the right platform architecture matters. Verpoint doesn't just offer limitless potential to trade, they actively emphasize the risk management side of the equation.
Which is crucial in a market like this.
Right. They provide advanced tools to protect and optimize trades, like guaranteed stop losses and dynamic margin monitors designed to protect your downside.
So they aren't just handing you the keys to a high-performance Formula One car and hoping you don't hit the wall. They're actually giving you the telemetry data to keep it on the track.
Precisely. And they back up that operational architecture with a highly transparent ESG framework, environmental, social, and governance.
Well, that's interesting.
Yeah, they operate under the core belief that financial innovation must align with accountability. They are building for long-term sustainability, which is a major reason why they have organically surpassed 50,000 active investors across their European network. It is about combining execution precision with systemic security.
And so I want to ask you, the listener, to really look at your own strategy. When this S-1 officially prices and the roadshow concludes, what is your move?
It's a tough call.
It is. Are you someone who chases that chaotic day one pop trying to ride the wave of institutional mandates and the scarcity premium?
Uh,
Or do you wait for the massive order book to settle, let the initial hype cool off, and invest with purpose in these long-term space and AI trends once the valuation normalizes?
because the moment that opening bell rings, the mechanics of fear and greed completely take over the tape. Having a predefined strategy and really understanding the mathematical difference between float dynamics and a trillion-dollar valuation cap is what separates informed trading from mere gambling.
Let's bring all of this together and recap the primary mechanics from our deep dive today. SpaceX's upcoming IPO is an undeniably historic event, attempting to pull $25 billion from the public market at a valuation exceeding $1 trillion.
A truly staggering figure.
Exactly. And this valuation is heavily driven by a powerful scarcity premium, as SpaceX sits as the ultimate gatekeeper for space infrastructure, global satellite connectivity, next-generation defense tech, and critical AI data routing.
But while the recent Cerebras IPO proves that public markets have an aggressive, almost ravenous appetite for scarce tech assets, the mechanics of market capitalization just cannot be ignored.
Math is math.
Right, SpaceX's enormous starting valuation, combined with a much larger float, makes a massive Cerebras-style day-one percentage pop mathematically difficult to achieve. A significant portion of the future optimism is already baked right into that trillion-dollar starting price.
It's the blockbuster movie that has to sweep the Oscars on night one just to break even.
Exactly.
We want to extend a huge thank you to Verpoint for sponsoring today's deep dive. Remember, you can open a commission-free multi-asset trading account in minutes to turn these complex market insights into smarter, actionable trades across Forex, stocks, indices, and commodities. They provide the low-latency platform you need to trade with confidence and invest with purpose.
As we wrap up this analysis, I want to leave you with one final lingering question regarding the mechanics of this IPO. We have focused extensively on what this means for SpaceX and the retail trader, but think about the broader venture capital ecosystem for a second.
Okay, what about it?
If SpaceX successfully vacuums up $25 billion of public and institutional capital in a single offering, what happens to the rest of the private space and tech sectors?
Oh, wow. Wait, does it act like a black hole for capital?
That is the exact fear in the venture markets right now. Does this historic IPO create a massive funding drought for their smaller competitors, basically starving the rest of the aerospace sector of the capital they need to survive?
That would be devastating.
It would.
Yeah.
Or, conversely, does a successful trillion-dollar listing validate the space economy so entirely that it ignites a brand new, wildly funded space race, lifting all boats and creating a boom in secondary public offerings?
That is a fascinating systemic dynamic to watch. Are we watching the crowning of a permanent monopoly or the birth of an entirely new public sector?
We'll find out soon enough.
We certainly will. So, as you think about buying that piece of the internet, that global defense contractor, and that space agency all rolled into one ticker symbol, remember to look past the cultural hype. Focus on the mechanics of the order book, respect the gravity of a trillion-dollar valuation, and always stay curious. Thanks so much for joining us on this deep dive.